You've worked your entire life. You've saved money in a bank account. A pension, maybe a retirement fund. You believe that money represents your effort, your independence, your future. But what if I told you that the system you trust to protect your savings was designed to drain them? What if your hard-earned money isn't really saved, but quietly transformed into debt, used to fund governments, inflate bubbles, and keep you trapped in a cycle of invisible servitude? And the cruelest part, you agreed to it, without even realizing this is the hidden story of how modern governments use your savings to fuel a machine that only benefits the few, a system where money isn't preserved. It's harvested. Welcome to the era of invisible debt slavery. Origins: the invention of savings and trust. Let's rewind to the beginning before banks. Before credit cards, saving meant one thing: keeping something real, gold, silver, grain. Land, tangible wealth that couldn't vanish overnight. When banks first appeared, they made a simple promise: give us your money, we'll keep it safe. But behind that promise was a loophole, one that changed everything. Banks noticed something curious. Most people didn't withdraw all their savings at once, so they began lending out a portion of those deposits, charging interest, while keeping only a fraction in reserve. It was the birth of fractional reserve banking, a trick that turned other people's savings into new money from that point on. Every deposit was also a loan. Your savings stopped being yours the moment you handed them over. They became raw material for the banking machine, recycled, multiplied, and leveraged by governments and financiers. And for a while, it worked until governments realized they could play the same game. But on a global scale, governments learned to print wealth from debt by the 20th century. The gold standard, the old limit on how much money could exist, was fading. Governments wanted to spend more than they earned, especially during wars and crises, so they struck a deal with central banks instead of taxing citizens directly. They would borrow money created from nothing, then pay it back later with interest. Who funded that debt? You did. Every time you buy a government bond through your pension. Every time your bank buys treasury securities with your savings. You're lending money to the very system that keeps you dependent. Here's the twist: the money you save is used to finance government debt, and that debt is then repaid with new money created through inflation, which silently steals value from the savings you thought were safe. It's a perfect feedback loop. You lend your money to the government, they spend it, then they repay it by printing more, which makes your savings worth less. The result: you lose time, the time it took to earn it. The breaking point: 1971. And the death of real money, the real breaking point, came in 1971. That year, U.S. President Richard Nixon ended the gold standard, severing the last link between money and real value. From that moment, money was backed by nothing but government decree. It became fiat currency. Let it be done money. Governments could now borrow and print without limit, and that's exactly what they did. The illusion of prosperity began. Stocks soared, housing boomed, and debt exploded. But beneath the surface, something sinister was happening. The value of each dollar, each hour of your work, began to erode. In 1971, $1 could buy what would take $7 to buy today. In other words, your savings lost over 85% of their real value, not through theft, but through policy. This is inflation, a polite word for government-sanctioned devaluation. Inflation isn't random. It's a strategy, a hidden tax that lets governments reduce their debt while the public silently pays the price every time prices rise. Every time your savings buy less, you are subsidizing the system that created the problem. And the rich? They don't save in money, they save in assets, property, stocks, businesses, commodities, all of which rise with inflation. That's why inequality keeps widening. The saver loses, the debtor wins, and the government, always the biggest debtor, wins. Most of all, the fallout. How savings became a tool of control after the 1970s. The world entered an era of synthetic wealth. Governments promised stability, banks promised returns, and people believed their savings were growing. But what they didn't see was how those savings were being weaponized. Every deposit you make gives banks more power to create credit. Every bond you hold gives governments more power to borrow. Every pension contribution feeds a financial system that no longer produces value, it extracts it. This is the core of invisible debt slavery, a world where your savings are used to expand debt. And that debt is used to devalue your savings. It's circular and it's deliberate in the 1980s. Deregulation allowed banks to gamble with public deposits. In the 2000s, cheap credit created bubbles in housing and stocks, and when those bubbles burst in 2008, the system didn't collapse, it evolved. Governments printed trillions to bail out banks using future debt, and who absorbed the cost? Savers' low interest rates meant your money earned nothing meanwhile. Asset prices exploded, enriching those who already owned them. The harder you saved, the poorer you became in real terms. This wasn't an accident, it was the system functioning exactly as designed. Failed fixes, the modern trap today, the same pattern continues, but with digital precision, governments now issue record levels of debt. Central banks create money with a few keystrokes, and ordinary savers are told to invest to keep up, pushing them deeper into the same machine that exploits them. Here's the cruel irony. Your savings account funds the government's debt. The government's debt fuels inflation. And inflation destroys your savings, forcing you to lend again just to survive. It's an economic treadmill that never stops. Even safe retirement funds are deeply entangled in this web. They buy government bonds considered risk-free, which means your future depends on the same debt that's eroding it, and now. The next evolution is already here. Central Bank Digital Currencies, CBDCs. They promise convenience, but they offer something else. Absolute control with CBDCs. Every transaction can be tracked, limited. Or reversed interest rates could be applied directly to your wallet. Savings could expire. This isn't speculation. It's already being tested in over 100 countries. It's not just money going digital, it's debt becoming programmable. The same system that turned your savings into government leverage will soon have the ability to turn your spending into compliance. The pattern repeats, from gold to digital chains. History doesn't repeat, it rhymes. The same cycle has played out for centuries. Governments promise safety. People trust and save. The money system inflates and collapses. New systems rise, promising to fix the last one. The empire of debt simply changes form. Gold coins became paper notes. Paper notes became digital balances. And now, digital balances are becoming tokens of surveillance. Every innovation makes the system more efficient, not at creating wealth, but at transferring it. Every time the illusion breaks. In 1929, 1971, 2008, 2020, governments step in to save the economy, and every time, the public loses just a little bit more control. The lesson's 3 takeaways. Takeaway number 1. Your savings are not idle. They are working against you when you deposit money in a bank. It becomes fuel for government borrowing and inflation. True saving today means owning value that can't be devalued. Takeaway number 2. Inflation is the invisible tax of the modern world. It transfers wealth from those who save to those who borrow, from citizens to governments, from workers to the system itself. Takeaway number 3. Financial independence begins with awareness. The system survives because people don't question it. Once you understand how your money is used, you can start building outside it through tangible assets, skills, and decentralized alternatives. The warning and the choice. The greatest illusion of modern life is that you own your money. In reality, your money owns you. Every paycheck, every savings account, every pension contribution feeds a network that quietly converts labor into leverage. But here's the truth. No system can erase. Debt only has power when people believe in it. The moment you stop feeding the illusion, the moment you start saving differently, spending intentionally, the system begins to crack, because invisible slavery depends on unquestioned obedience. The future of money is being rewritten right now, and whether it becomes a tool of liberation or a weapon of control depends on how many people wake up before it's too late. If this video helped you see money differently, don't let it fade into background noise. Share it. Discuss it. Learn more, because awareness is the first step toward freedom. This is how governments turn your savings into invisible debt slavery. But the next chapter, the chapter where people take back control, hasn't been written yet. Maybe it starts with you.